Okay, welcome everyone. Jason here again from AllianceCorp Property Experts. I've got another great video here for you. Now, this is a question that we get asked in the business almost daily. Jason, how much do I need to invest in property? All right, what are the costs? What sort of deposits I'm looking at? Now, why is this question so important? Because a lot of people are getting information out there that's not entirely accurate. A lot of people are being told that they might need $100,000 or more to buy their first investment property. It simply isn't the case. And for you looking to save a deposit, a significant deposit of that nature might take you 2 years, 3 years, 4 years. And all that while you're missing out on potential cash flow, income from the property as much as $10,000 a year. You're missing out on capital gains. And in some instances, you're actually saving slower than the increase in properties over time. So you're actually going backwards. So it's really important that we get into the market as quickly as we can and we understand the costs involved. What I'm going to do is I'm going to look at three main considerations. The first being, well, what are some of those expenses I'm looking at? Then we'll look at the different types of properties and how that can affect your deposits, etc. And then we'll look at some of those incentives as well that can help reduce your deposits and get you into the market as quickly as possible. So the first one I want to quickly have a look at here is, what are the expenses? Well, number one, the biggest expense, we all know this, it's the deposit. But how much? Because again, depending on who you talk to, you might have been told 20% deposit. That's not true. Some of you may have heard, well, 10% is the absolute minimum you can put in. Well, that's not true. You can go as low as 7 or 8%. So you can get some loans up to 95%. They're very hard to get. Obviously, we can help align you with those lenders. And built into that 95% is your LMI, which I'll talk to about as well. So as little as sort of 8 to 10% as a general rule. Stamp duties can range anywhere between 3 to 5%. The states are different. For example, Victoria, we absolutely get hammered on stamp duty. It's 5% of the value of the property. If you go to somewhere like Brisbane, it's as little as 3%. But it also depends on the type of property, because if you buy a parcel of land first, you only pay stamp duty on the value of that land, and then you can put a home on top. So you're not actually paying stamp duty on both the land and the cost of the construction as you normally would with an established property. So that's typically what you're looking at, those two: deposits, stamp duties, biggest costs, and then your lender's mortgage insurance. So your lender's mortgage insurance, I've done plenty of videos on this, guys. Look, sure, if you've got the cash and you've got the equity, you can avoid it. But if you don't, lender's mortgage insurance is one of the greatest things that were created, particularly for investors, because it allows you to put in these very small deposits. Without lender's mortgage insurance, which the banks charge you if you want to lend above 80%, it would take you a hell of a lot of time and money to get 20% deposits every time you bought a property. It's not cheap. It can be anywhere between 1 to 3%, depending on whether you're taking out a loan for, say, 85% or going right up to 95%. But it's a once-off cost. It's tax deductible. But that's probably your next biggest cost. Other costs, you've got legal fees, solicitors, conveyances, loan application fees. You've got some disbursements there when you purchase the property to do with rates, water rates or anything like that with regards to the property, insurances on your property. If you do buy a parcel of land first and you're building on it, well, you'll pay the interest on the land while the house is being built. So we refer to that as holding costs while you wait for the property to be completed. You might have some body corporate fees there, etc. All right. So in terms of your other costs, again, it depends very much on what you're paying for that property, the type of property again, but it could be anywhere between $3,000 right up to about $10,000 there as well. So there are some considerable costs, but again, what does that mean for you? All right. So I'll go through some examples shortly. Let's have a look at the different types of properties and how that also affects it. Okay, so let's look at the types and price point, really important. So as you can see, you've got three examples. So if you're in Melbourne looking to buy your first property, you might be looking to buy in your local area somewhere. If you're looking at a price point of, say, $600,000, when you purchase this property, even on a 90% lend, you'd still be paying about $60,000 in deposit. Then on top of that, 5% on the purchase price for stamp duty. So now you're looking at another $30,000, taking us to $90,000. You're paying lender's mortgage insurance of roughly 10 or more on that property. Add a few legals and other bits and pieces, and you're looking at 105, right? So this is where people may have said, well, look, that's absolutely what you need to do to get into the market. But that's because it's that type of property being established, full stamp duties, and also a higher price point. Now, if you want to get your deposit down lower, well, then maybe you look at a house and land, that you buy the land first and put the house on it. If you go to Queensland, one of the things you'll notice is the stamp duties aren't 5, they're 3. and you'll only pay the stamp duty on the land component. So your stamp duty will be less than $10,000. So if you drop your price point also, and you look at something around the $500,000, $50,000 for your deposit, you'll have stamp duties on that of just under 10K. Your LMI will be also just under 10K. You'll have some holding costs there, maybe 6 to 7, add some legals. You probably get away with around $75,000 to purchase that property. If you want to get your deposit lower again, another option is a townhouse. So again, townhouses can be great. You can buy them in infill locations. You can get a little bit closer to the city. But with a price point in around the $400,000, again, if you're looking at Queensland, lower stamp duties as well. With the deposit being just $40,000, you'll pay 3% on that, roughly $12,000 for stamp duties. You'll have some lenders' mortgage insurance, add some legals and bits and pieces, and you're probably looking at it around that sort of $60,000, right? So as you can see from these examples, there's a big difference between, say, $60,000 and over $100,000 to get started with your first investment property, but it doesn't stop there, right? So the next consideration we're looking at are incentives. How can we use incentives to also get our deposits down further and get into that market quicker? Okay, so this is the third consideration. This is all about incentives, all right? Now, when we look at incentives when buying properties, these aren't normally available when buying older established properties on the market. It's more related to newer properties. For example, the government provides incentives for you to buy new or off the plan because they might want to stimulate the building and construction industry at that time. You probably would have heard a lot of incentives to help first home buyers get into the market, etc. Currently, for investors, there's a home builders grant. It's not available in every state for investors, but for example, if you look at WA, it is. There's up to $25,000 there to help with deposits. But then there's also the private sector. So like with any private organisation that is selling a product, from time to time, they'll have products on sale or bonuses, or etc. In the example of builders and developers, they often have rebates or grants. They can be cash rebates of between, say, $10,000 to $15,000. Again, all helping to reduce the deposits, etc., that you need to get into the market. Then, of course, there's AllianceCorp. So in our business, 12 years now, helping clients get into the market, helping them build investment portfolios. Particularly happy to help first-time investors get started with their first property. Where we can see your financials are quite strong, we're more than happy to also help top up some of those deposits to help you get into the market quicker. So as I mentioned before, $100,000 plus in terms of getting into the property, not true. You may have been thinking to yourself, it might be another year or two for you to get to that point. Over that period, you would have been losing a lot of money in cash flow, positive income, capital growth. Well, you might find now that with the deposits that you have today after this video, you might be able to get into the market within the next 6 months. So as little as $30,000 to $40,000, all right? As little as $30,000 to $40,000. Now that depends where you're buying, what type of property, what's the purchase price on the property, what sort of incentives are we able to get access to. But literally, if you've got between 30 and 40 and you've got a good savings history there, you definitely need to have a chat to one of the team. So what we've organised for you is a complimentary property and finance coaching session. Normally those sessions are valued at $495. It's complimentary. You get the chance to sit with one of our senior property coaches who will look at your current financial position and also educate you on the different markets around Australia, the different types of properties and what sort of incentives are out there so that you can get into the market a lot sooner. And really get started and really fast track your results in terms of growing your portfolio. So guys, I hope you really enjoyed the video. I've got plenty more of these on the website and on YouTube, etc. You guys have a great day and we'll speak to you soon.